Hello everyone and welcome to another video. Today we're going to be talking about prop firm challenges and ideally how you can possibly pass one. Prop firms have become more popular than ever before. Pretty much everyone in this industry has either tried, get funded, or is at least familiar with the concept of proprietary trading. Typically, prop firms have some sort of challenge where a trader needs to show their skills in order to get funded. However, these are not always as easy to pass as they would like to make you believe. In this video, we're going to be looking at a few tips on how to pass them, and let's not waste any more time and let's get right into it. Alright, these challenges that we're talking about, they tend to be usually pretty simple in their nature, but a lot of traders lack the skills that are absolutely necessary for passing them. Being able to pass those challenges is incredibly important if you want to proceed anywhere in online trading these days, as training your own account, I mean, we've made videos about it, but it's usually not the way to go if you want to take trading into the level where it's your main career and main source of income. So we have some motivation behind why we want to pass the challenge. Now let's look at the criteria that we usually see in the prop firm space today. What prop firms typically ask for before they give you any real money to trade is to trade on a demo account and be able to achieve some sort of profit target without losing a certain amount of money. These challenges tend to usually be either 1 or 2 phases. The industry average that we see in terms of profit targets these days is somewhere around 10% for stage 1. So like I said, you usually have either 1 or 2 stages to the evaluation, where in the first stage, usually we see those profit targets average to about 10%. This, of course, has to be achieved without violating what's called a maximum drawdown. Some firms have relative drawdowns, some firms have fixed drawdowns, some have hybrid drawdowns. In the end, the concept is pretty similar everywhere. It simply is some sort of margin of money that you are allowed to lose before you fail that challenge. These days, the industry has shifted a little bit, and we usually see that traders have an unlimited amount of time to complete those profit targets. But it's not that long ago where we saw a lot of firms have very strict profit targets. I'm glad to see that the industry has moved away from that, but we saw firms pushing traders into making those kinds of profits in 10, 15, 20 days. So there used to be a lot of pressure. These days, luckily there's been some pushback from traders, and we simply see that most firms do not have some sort of time limit anymore. So why do these prop firms even have these challenges in the first place? So pretty much all prop firms these days will have some sort of challenge unless it's an instant funding model, which due to its aggressive nature, we're seeing less and less of these days. The reason why a prop firm has some sort of challenge or evaluation or whatever you want to call it is simply to weed out the unprofitable traders from the profitable ones. Each firm wants to see the ability of their traders before they entrust them with any sort of capital. I mean, I'm sure you would too. If you were to give your money to someone to trade or to open a restaurant, you would want to see that they are skilled at the thing that they're asking to pretty much borrow money for before you give that to them. So if it would be a restaurant, you would want to at least taste the person's cooking before you give them a bunch of money to open a restaurant. And it's the same thing with trading. A firm is going to want to see how good of a trader you are before they entrust you with any capital. But unfortunately, there is a percentage of prop firms where this is not the main goal, where the main goal is to take the challenge fee and to basically live off of that and never get any traders funded. Unfortunately, those firms exist in this world as well, and they tend to taint the name of the industry a little bit, which is a bit saddening. However, there are firms who work with real money, who are reputable, such as Lux Trading, for example. And in those cases, you'll see the motivation behind the challenge or behind the evaluation being really weeding out of the unprofitable traders and being able to give an environment where traders can succeed to the profitable ones. So we've gone over why you would want to pass a challenge, what the challenge is, and why prop firms have those challenges. So now let's get into those tips that I mentioned in the beginning. The first one is going to be absolutely simple, and that is have a trading plan. I know I've said it so many times on this channel before, but it's really one that rings true every time. I mean, trying to pass a challenge without having some sort of a plan is something that we see way too often in the industry. Traders get excited by shiny advertising and they jump into it, as one would say. You can't do pretty much anything in life without thinking it through first. And it's the same with trading, you know, just trying to get into the market every single day and make some sort of profits without a well-structured plan of what you're gonna do is financial suicide. The second tip I have for you is build your risk management strategy, build it well. A trading plan is not enough to become a funded trader. A lot of these prop firms have pretty strict rules. So what I recommend you do is you go to their rules page. You first understand the rules, because so many traders come to prop firms without ever reading any of the rules, and then they're surprised that they reach the profit target, but they haven't followed rule A, B, C, D, E, F, G, and then the prop firm tells them, well, we're sorry, right? So I think the first thing that you should be thinking about when signing up with a prop firm is going to the rules page, carefully reading through the rules, and then building a risk management strategy based off of the rules. Because you can have a trading strategy, but if you don't have a risk management strategy that fits the rules of the proprietary trading firm, you're not going to get anywhere. My third and one of the most important tips is to take your time. So many traders want to become rich so quickly, and I understand it. It's what the advertising says a lot of the time. It's what people want. I mean, wouldn't I love it if I could trade $20 million tomorrow and just easily take home 10% of that every month? Yes, I would, and it would be amazing, but it's not realistic. The same way as if I walk into a hospital and I would say I want to be a doctor by next week, they'd laugh at me. And with trading, you have to realize that it's similar. It's something that takes time, it's something that takes dedication, and even combining those two factors, only a small percentage of people succeed. So if you are in trading with the vision that you're gonna be rich next week, I'd say to reevaluate your own mindset in that case. And really, with passing a prop firm challenge, you truly need to take your time, give it patience, and work on it. And with those three elements, you should be able to succeed. Okay, so to sum up what I want you to take away from this video, it comes down to three elements, really. The first one is having a good trading plan. The second one is understanding the rules and building a solid risk management strategy. And the third one is taking your time and not rushing in the industry. It doesn't really lead anywhere. Tell me, do you have any advice for those who are maybe starting out, maybe newer, and maybe even for those who are in the industry for a long time but struggling? What is your key to success? Let me know down in the comment section below. And if you want to get in touch with us, feel free to contact our 24/5 live chat or email us at one of the contacts available at our contact page. Thank you for watching this video. Mine has been Oliver, and have a great one.